What's going on, guys? My name is Richard Moglen, and welcome back to your stock market outlook video sponsored by MarketSmith. And today we saw a continuation down from the negative price action on Thursday, and overall the Nasdaq Composite lost 2.78% on an increase in volume, adding another distribution day here, and definitely a negative changing character in the market to end out this week, undercutting this key level. And what remains to be seen is whether we hold this rally attempt in the coming days and weeks. But in this video, we'll walk through the indexes, talk more in depth about the price action, then we'll talk about a few market leaders, how they're performing. We'll talk about a few different sources of sentiment, the IBD Big Picture article, and finally the Wishing Wealth GMI signal. And we're going to cover a lot today, so make sure you tune in and stay until the end. And if you do enjoy this video, please go ahead and take the time right now to leave me a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. And with that said, let's dive a little bit deeper into this chart of the Nasdaq. And first things first, we are currently below that 200-day moving average, which is now flatlining. And there's an old saying that nothing good happens under that KMA. And for the most part, that's true. You can see that ranges have widened here. It's very volatile. We're gapping up and gapping down. There's no kind of rhyme or reason and definitive trend, which is obviously what we look for as trend followers, swing traders. And it's just harder to manage risk when price action is very emotional and liquidity dries up. We're also below a declining 50-day moving average, which similarly isn't usually a great sign for trend followers. And we tested the declining 21 EMA once and twice, and were rejected now from that area. So overall, not great action. And as of right now, we've kind of confirmed that we're still in a corrective state. And the market leaders as well have said that, and we'll take a look at those charts later on in this video. But very negative price action, fall through to the downside on this Friday, not a great end to the week. And we've got two straight distribution days on the Nasdaq. And moving on to the S&P 500, this is a little bit stronger in general, but we once again are back below the 200-day moving average here. And we also undercut this pretty key level here. And once again, two distribution days in quick succession, and not a great end to this week. We're back below the 4,500 level, which is pretty key from a sentiment standpoint. And we weren't able to break above here and get back above the 50-day moving average. But visually, you can see this a little bit stronger than the Nasdaq. We're not as far below the 200-day moving average. So this in general is showing a little bit more relative strength. And in the coming days and weeks, no one knows what's going to happen. We could challenge these lows or just rally strongly back through the 50-day moving average and the 4,500 level. So the most important thing is to stay optimistic, protect your costs, protect both your financial and mental capital, and be ready once we really do get a new uptrend. So with that said, let's take a look at a few other key indexes for growth stocks, starting with the IWO, the Russell 2000 Growth. This is definitely a little bit weaker than both the Nasdaq and S&P 500. And once again, we had two negative days here on Thursday and Friday to end out the week after a rally into the 21 EMA area, and we're below a declining 200-day and 50 SMA. So right now, the intermediate and longer term trend is down. Looking at the Russell 2000 in general, looks very similar. We're below these lows here. You can see we rallied pretty much right to that point and rejected downwards on an increase in volume. Once again, not constructive price action, but maybe we firm up above 200 and are able to challenge that and retake it. We just don't know. All we have to do is be ready once that actually occurs. Lastly, taking a look at the Innovator IB50 ETF, the FFTY, you can see we're below a declining 21, 50, and 200-day moving average, not the optimal basically environment for growth stock traders. And we are below this base right here and the 40 level. So the trend here is still down, but we are staying above these lows for the time being. But looking at this, it looks like maybe a test of that is in order. We're just not sure. And all we have to do is react to what actually happens. We don't have to predict and be ready for whatever can occur. So with that said, looking at the indexes, things are pretty negative, especially the end of last week, but stay flexible and stay optimistic. Moving on, let's talk about a few really important growth stock leaders to look at that kind of give you a sense of the risk appetite of institutions. And let's go ahead and start with Tesla, which is always important to look at. And you can see it had been building this constructive looking tight area on declining volume, but then we had a negative end to this day and then fall through below this key level to end out the week, ending the week below 900. So negative price action, holding above these lows and the 800 level, as well as the 200-day moving average. But I think this area right here will be pretty key, and I'll be watching that pretty carefully going into next week. Moving on to NVIDIA to get a sense of how chips are doing. You can see, once again, negative price action, downside reversal on Thursday, fall through to the downside. This would have been a pretty good short entry right here as it broke this low right here, as well as the 21 EMA. Ending the day right at the lows. It's still above this level for the time being, as well as a 200-day moving average, but we'll have to see what happens. And you can see it rallied basically into the declining 50-day moving average and then was rejected downward on a pickup in volume. AMD as well looks pretty similar, very negative price action, following through on that negative day on Thursday. Once again, a rally into the declining 50 SMA, and it's back at the 200-day moving average, and just looks pretty negative here. Big volume on this decline. And moving on to a few recent earnings gap ups, you can see Bill.com, negative price action today, but is holding above that HVC, as well as the 200-day moving average and the 50 SMA. So if you can build out here, I think that would be very constructive. And in my opinion, this is still one to watch going forward. Snapchat, a little bit more negative. You can see the downtrend is a little bit more severe. It's not above the 200-day moving average, but good volume here. But once again, negative action today, although it is holding above that HVC. DDOG was a new one here. Bringing up that chart, you can see we're undercutting these lows, but it could kind of firm up and build out. I think that would be very constructive, and we're above the 50-day and 21 EMA at this point. And I like the action. Really strong numbers here reported as well. Earnings surprise of plus 66%. So definitely a name to have on your list going forward. Moving on, let's talk about Bros. You can see negative price action here, downside reversal. Here was another downside reversal through 60. Definitely include to be on your guard. And you can see fall through to the downside here, breaking the 21 EMA. I did sell the last of my position on this day today on Friday. Moving on, let's talk about a few more names. First of all, XLE continues to be pretty strong. Nice action today as well. Coal as well has been strong. AMR is a name I've been watching. Really strong action today. AA as well. Very strong action. So there is stuff working as of this point, but most likely they're mining stocks, they're oil and gas related stocks, energy stocks, and not the traditional growth type names that we like to trade. So basically we'll have to see what happens with these ones. And for the most part, they are a little bit short-term extended, many of them. ExxonMobil, let's bring that up. You can see nice action today, but a little bit short-term extended from that 50-day moving average. So there is some names working. Energy has been a sector that's been definitely outperforming over the course of this year. But for the most part, growth stocks in general have been struggling a lot, and we'll just have to wait and see what happens. And moving on to a few more names here, we'll run through these pretty quickly. You can see SQQQ on my screen, definitely acting well. You could have bought through this pivot right here, as well as this day, and breaking above this short-term resistance, and looks pretty good. Nice volume on these recent 2 days. Going through this list, let's run through these pretty quickly. AMR, super strong. Actually, this is AA. AMR as well, super strong. Holding that 10-day moving average, definitely a character change if it closes below it. CDEV acting well. Oxy trending above that 10-day as well. Arch, really nice action. CF, nice action as well. MUR, nice move off the 21 EMA. Good volume today as well, closing right at the highs. FANG, another energy name, acting well. Venom, also strong, breaking above this short-term DTL. REGN, nice action today, breaking through these pivots and the 50-day moving average. Definitely a name to have on your radar. Nice longer-term base here, and almost a handle within this overall cup and handle pattern. DVN also acting well above the rising KMAs here. Tech action is really strong. LMT also acting well. Obviously, you've got the unrest in basically Ukraine because of Russia. So that's most likely why this is acting very strong. XLE in general breaking above this key level. OAS acting not quite as strong as the other ones, but still good action today. Inside day. MTDR also an inside day. ExxonMobil, nice action through this very short-term DTL above the 10-day moving average. COP riding that 10-day to higher prices. MDRX, a little bit of a frozen rope feel here, but above the 10-day. SLGN, not great action, downside reversal here, and I'll most likely take this off the list. Just kind of very choppy price action in general as well. LLNW holding that 21 EMA, finishing off the week with an inside day, so showing a little bit of relative strength relative to the market with respect to that, but it could break lower and be a very quick mover to the downside next week if it does break this low right here. You've got a lot of pivots lining up within that area. VRTX breaking the 21 EMA to the downside, gap down on this Thursday. V also not the greatest action, holding above that 21 EMA for the time being. VSCO, nice push up here off the 21 EMA and finishing off the week with an inside day. MasterCard similar to Visa. Apple, once again, a wedge drop here. Not great action on increasing volume. Snap we covered already. Google, really negative action here. You can see it's pretty much sold off since that earnings gap up. Yeah, not a great looking chart as of this moment. Netflix also breaking these lows right here. P-Lab breaking that 50-day downside reversal here. Actually, basically just a fade here, a squat, and then fall through to the downside on this Friday. GSL looks like a negative outside bar today. Zim also a very similar bar here, still holding that 10-day moving average, but beyond guard when you see bars like this on increasing volume. NEWR gap down here and fall through to the downside. Huge volume on this gap down as well. That's why you don't want to gamble in front of earnings because you can just basically be holding a stock that gaps down 25% the next day. Bill, decent action holding above that HVC. This is a key level and lines up with the 50-day moving average, the 200-day moving average, the 10-day. A lot of potential areas of support right in this area that I'd love to see it hold. But definitely in the short term, negative action starting with this day right here. Tesla, we talked about pretty much a wedge drop through these lows. Qualcomm, very negative action, similar to AMD and NVIDIA, but almost a little bit worse. Yeah, looks like a retest of these lows is in the cards in the near future. Bros, wedge drop, you can see a losses, anchor rewaps. And lastly, SG looks like breaking these lows, not great action as well. So overall, a little bit of a mixed bag. You can clearly see the strength in the energy and coal and mining names here. And a lot of the other names are seeing some short-term weakness. And some of the high volume gap ups are holding up better than most. But a lot of the names, Google, Amazon, Apple, the big cap names are struggling, which is reflected in the overall index. So with that, let's move on to a few different sources of sentiment, starting with my Twitter surveys. Taking a look at the results, you can see a drop from last week where we were 32.8% bullish, now 21.4%, so that is significant. Looking at the name exposure index is actually going the wrong way from a contrarian standpoint, increasing from 62 to 66. And looking at the bulls versus bears poll, we're actually declining, which is good, but we're not quite at that crossover level where we see potential bottoming action. Looking at the put-call ratio as well, we actually declined this week. So I'd love to see another spike up to 1.15. So overall, in terms of sentiment, we're a little bit mixed. And I'd love to see some more fear come into the market and really see that name exposure index drop dramatically. I think that would be very constructive. And moving on to the IBD big picture article, the headline is Stocks Today Tank Broadly. How far could indexes fall in an attack on Ukraine? I discuss a little bit about the situation in Ukraine, the action in the indexes. They've got a chart of the FFTY, which is in an overall downtrend here. I discuss the distribution day count and how it's a little bit low. But in my opinion, the ultimate decider on market health is kind of the health and breadth of market leaders. And that's really just lacking, even though the distribution day count is still relatively low. They also mentioned EXPE, which reported earnings last night. Negative price action here. You can see a big downside reversal bar. And they discuss a little bit more about the Russia threat and the overall VIX. So currently, their view is a uptrend under pressure, 3 distribution days on the Nasdaq, 2 on the S&P 500. You've got some leaders up in volume and some down in volume as well. And lastly, we've got the Wishing Wealth GMI signal, which is currently red since January 10th. And you can see that the QQQ remains in a blue-white-red downtrend as of this moment. And the GMI score on Thursday was only a 2 out of 6. So overall, my current view is a market in correction. We're in a very volatile environment. As of this moment, we're getting gap ups and gap downs. On the long side, there's the miners, there's the oil and gas names that are trending nicely above those moving averages. But that's pretty much it when it comes to things that are working for the long side. And on the short side, there's definitely a ton of opportunities out there, starting with Thursday and Friday this week. But overall, because it is so volatile out there, you want to manage risk tightly, use smaller than usual position sizes, and focus on preserving that financial and also mental capital. So overall, I hope you guys enjoyed this video. If you did, please go ahead and take the time right now to leave me a like down below and subscribe if you're new to the channel and want to see more videos just like this one every single week. And with that said, thanks again for watching, and I'll see you guys in future videos. Thanks.